Welcome to the deep dive. Now, you, our listener, you're coming to this with a strong background. Senior financial analyst, fundamental research, company valuation, that's your wheelhouse.
That's right.
So today we're applying that very specific lens to the pharma sector. We'll be digging into the Indian domestic market and also looking at export performance.
Exactly. We've got a couple of key documents to work with. There's the Centrum IPM Pulse Report for March 25,
Right, that gives us the domestic picture.
and then we have IFL Capita's analysis, focusing on product-wise export data for Q4 FY25.
Okay, so a dual focus then. Understanding the Indian pharma market, the IPM dynamics, and then layering on how these companies are doing globally, looking at specific product exports.
Precisely. The goal is to really synthesize these, pull out the core insights for a solid fundamental analysis.
Great. Let's kick off with the domestic side, that Centrum IPM Pulse report. It flags a pretty noticeable rebound in IPM growth for March 2025, up 9% year on year. What's the immediate take?
Yeah, 9% looks strong, but context is key here. It's bouncing off a really low base from March 24. Remember, Feb 24 was only 1.5% growth, and Feb 25 was 4%.
Ah, okay, so the base effect is significant.
Very much so. Month on month was just 1%. Maybe more telling is the moving annual total, the MA Cook growth. That stood at 7.7% year on year.
Okay, 7.7% in MAT. How does that break down? What's driving it?
Well, this is where it gets interesting. Price increases accounted for 4.5% of that.
Okay.
New products added another 2%. But volume growth is pretty muted, only 1.1%.
1.1% volume growth. That feels, it feels low for this market traditionally. Any reasons cited?
Yeah, the report points directly to competition, specifically Yana Shadi and the rise of trade generics. They seem to be putting real pressure on branded volumes.
Right, so a structural shift maybe. Price becoming even more critical.
It certainly looks that way. Competitiveness on price seems paramount for holding on to market share.
The report also mentioned MNCs slightly outperformed Indian companies in March, 10% versus 9% growth.
Yeah, a slight edge for MNCs. It's not a huge gap, but it is the second time in the last 3 months they've done that.
Something to watch, maybe.
Could be. Might signal, a renewed push from them, or maybe their specific therapy focus is just holding up better right now.
Okay, let's pivot to the therapy areas. The trend of chronic therapies leading the way, that seems to be continuing, even strengthening.
Absolutely. Chronic therapies, that's about, 39% of the IPM. They showed epic growth of 9.5%.
Compare that to acute therapies.
Which are the bigger chunks, 61%.
Right, but they only grew 7% MAT. And that difference actually widened in March itself. Chronic hit 11% growth year on year, while acute was at 8%.
So the focus on long-term condition management is really driving growth.
Definitely seems to be the engine right now.
And within chronic, any specific therapies really standing out in March?
Yes, cardiac and gastrointestinal were clear leaders. They posted 13% and 12% year-on-year growth, respectively, in March. Really strong numbers. Wow, significantly outpacing the overall market.
Yeah. Anti-diabetic was also decent, slightly above IPM at 10%.
And on the flip side, which areas lagged?
Anti-infectives and respiratory. They underperformed the IPM in March, growing at 5% and 6%.
Respiratory underperforming. Any thoughts on why? Seasonal, maybe?
Could be seasonality, yeah. Or maybe, shifting treatment patterns, more OTC options, perhaps. It warrants a closer look.
Agreed. But there were some bright spots outside the big chronic areas, too.
Definitely. Urology showed really strong growth, 17% year-on-year in March. That's good news for players like Sun Pharma, Mankind, CIPLA.
Okay.
And Derma also had healthy growth at 8%. Key players there are Sun, Glenmark, Dr. Reddy's, GSK, Mankind.
Right. Let's talk companies then. CIPLA had a particularly strong March, it seems.
They did, yeah. Fastest growth among the majors in March, 17% year-on-year.
17%, that's significant.
It is. But quite a few others also outperformed the overall 9% IPM growth. GBCP, IPCA, Glenmark, INTAS, ABBOTT, Sun Pharma, ZYDUS, Torrent Pharma, ALKEM. They were all above that 9% mark.
Okay, so broad strength in some areas, or maybe just effective strategies from those specific companies.
Likely a mix of both.
And who lagged the market in March?
Mankind, LPC, Lupin, GSK, Iris, and Dr. Reddy's all came in below the 9% IPM growth for the month.
But looking just at 1 month can be tricky. What about the underlying volume growth on that M basis you mentioned?
Good point. That gives a clearer picture of sustainable performance, perhaps. IPCA leads the pack there, with 6% MAT volume growth.
6%, that's solid.
Yeah. And JBCP, INTAS, Glenmark, ZYDUS, Sun Pharma, ABBOTT, and CIPLA also showed M volume growth better than the overall IPM's 1.1%.
So those companies aren't just relying on price hikes or one-off new launches.
Exactly. It suggests a stronger underlying demand for their portfolios.
Interesting, because the report did mention some companies were more reliant on price or new products for their March performance?
That's right. It flagged LPC and Torrent Pharma's outperformance in March as being primarily driven by price increases. And Dr. Reddy's growth was noted as being more dependent on new product contributions that month.
So different levers being pulled across the board. Did these performances lead to any shifts in rankings?
A few minor ones in March. TRP, INTAS, IPCA, and IRIS each nudged up one spot. JBCP made a bigger jump, up 3 places to number 20.
JBCP.
And looking longer term, MNT basis, IPCA also improved its rank by 1 place. So some subtle shifts in the competitive landscape.
Let's quickly run through the March numbers for some of the biggest names. Sun Pharma.
Sun Pharma grew 11% year-on-year in March. Pretty healthy.
CIPLA, we know, 17%. Mankind.
Mankind underperformed at 8%.
Lupin LPC.
Also 8%, and as we noted, likely price-driven.
Dr. Reddy's.
More modest, just 1% growth in March.
Okay. And some others, Glenmark. IPCA.
JBCP.
Glenmark was strong at 14%. IPCA even stronger at 15%. JBCP also robust at 16%.
ALKEM.
ALKEM was right in line with the market at 9%.
ABBOTT, representing the MNC side.
ABBOTT grew 11%, so they outperformed the market average.
And GSK.
GSK underperformed with 4% growth in March. How about market share? Any big surprises in the MAT rankings? Sun still leading?
Yeah, Sun Pharma remains number 1 on a MAT basis, followed by ABBOTT, then CIPLA. The top order is fairly stable.
But CIPLA's strong March could nudge their share up over time?
Potentially, yeah. These monthly growth variations, if sustained, can gradually shift the standings.
And that acute versus chronic split, still majority acute but chronic driving growth.
That's the picture.
Yeah.
Acute therapies make up 61% of the market by value.
Mm-hmm.
Amity, chronic is 39%. But yet chronic's growth rate is significantly higher. That's where the expansion is really happening.
The report also has that detailed therapy table. Anything else jump out from the more granular data?
Well, beyond the big categories we discussed, that 17.4% year-on-year growth for urology in March really stands out. Hepatoprotectives also look strong.
Okay.
And conversely, that respiratory number, seeing a nearly 9% month-on-month decline in March, is quite stark. Definitely needs unpacking.
Yeah, that's a big drop. And the table showing top companies by therapy, always useful for seeing who competes where.
Absolutely crucial. You know, seeing Sun, Torrent, Lupin, Glenmark, Mankind dominating cardiac, or Sun, ABBOTT, ALKEM, Torrent, Dr. Reddy's, and Gastro, it paints a clear competitive map for each key area.
Right. Okay, let's switch gears now. We've covered the domestic IPM dynamics pretty well. Let's look outward at the IFL Capital analysis of export data for Q4 FY25.
Okay, yeah, this gives us the global perspective looking at product-specific export trends for quite a few companies.
Let's start with Divi's Labs. They're big in APIs, both custom synthesis, CS, and generics. How did their Q4 exports look?
Their overall export shipments grew 6% quarter-on-quarter in Q4, which was actually a bit below IFL's expectation of 9%.
Okay, a slight miss. How did the two segments perform? CS versus generics?
The growth was really driven by custom synthesis. That segment grew 12% QOQ. Generic products, on the other hand, only grew 3% QOQ.
I see. So CS pulled the weight. What specific CS products were strong?
The report highlights raltegravir, upadacitinib, a Pfizer investigational drug PF 073134017, a new Brochpant intermediate, and also some GLP-1 related products.
Okay, a mix there. Were there offsetting declines?
Yes, definitely. Growth was dampened by lower CS shipments of sacubitril/valsartan, sitagliptin, iopramide, orlistat, and others. And on the generic side, declines were seen in things like levetiracetam, dextromethorphan, carbidopa.
Now, sacubitril/valsartan, the report flags that specifically. What's the issue there?
It's a huge product for Divi's CS business. Apparently contributed something like 43% of their FY25 CS sales.
Wow, that's substantial.
It is. And the patent is expiring soon, July 2025. Generic competition is expected to ramp up quickly after that.
So a major headwind for their CS growth and probably margins starting from the second half of FY26.
That's the concern IFL raises, yeah. It's a really critical factor for Divi's outlook and valuation.
Definitely a shadow there. Okay, let's move to Gland Pharma, another big exporter. How was their Q4?
Gland's growth was quite muted, only 2% QOQ growth in export shipments. That was well below IFL's 16% expectation, even excluding the Cenexi acquisition impact.
Only 2%. Quite slow. Any bright spots?
One notable one was enoxaparin. Shipments increased sharply quarter on quarter, apparently driven by U.S. demand.
Okay.
They also saw some support from ketorolac, mycofungin, chlorothiazide, and levothyroxine.
But obviously offset by declines elsewhere.
Right. Declines in heparin, caspofungin, meropenem, and rocuronium shipments pulled the overall number down.
Got it. What about IPCA Labs? We saw they had strong domestic volume growth, exports.
IPCA's Q4 exports grew 7% QOQ, again slightly below IFL's expectation of 9%, excluding Unicum.
What drove that 7%?
Products like artemether paracetamol, allopurinol, and Zerodol were contributors, but offset partially by drops in HCQS, Rapaclov, and metformin.
Okay. And Unichem, which IPCA acquired, how did their exports do separately?
Interestingly, Unicum's exports grew 9% QOQ, which was actually above IFL's expectation.
So combining them, IPCA plus Unichem might see better overall export revenue growth?
Potentially, yeah, there could be an upside risk to the combined export revenue.
I sense a...
But the potential impact on margins. If a larger portion of the combined exports comes from Unicum, which is generally seen as having lower margins than IPCA's base business, it could dilute the overall profitability.
Right, that makes sense. Top line boost, but maybe a margin hit. Okay, how about JB Pharma? IFL like them on the domestic side, exports.
JB Pharma's exports were up 6% QOQ in Q4. That was slightly ahead of what IFL expected.
Any specific driver?
Yes, their lozenges CDMO business. Those export shipments jumped 21% QOQ.
21%, that's strong.
Yeah, and the report suggests they have a good order book, so that strong performance in the higher margin CDMO segment is expected to continue and should help their Q4 EBITDA margins.
Good news for them. Loris Labs had a huge jump, 67% QOQ growth.
That's right, a massive 67% QOQ increase in export shipments for Loris in Q4.
What fueled that?
Mainly driven by their CDMO business supplies for Vertex and Pfizer were mentioned, and also increased exports of HIV products.
Okay. Any caveats?
One area saw a drop. Their animal health supplies to Intervet, or MSD Animal Health, apparently have QOQ.
Interesting. Newland Labs, in contrast. Flat performance.
Pretty much flat, yeah. Newland's Q4 export shipments didn't change much QOQ. A drop in bempedoic acid was offset by a rise in tetrabenazine. CAR-XT shipments were stable.
Concord Biotech, those strong growth.
Very strong. 55% QOQ growth overall in Q4 export shipments.
55%, wow. API-driven.
Mostly, yes. API exports surged 64%, while formulations actually dipped slightly. Big API drivers were cyclosporine, everolimus, and tacrolimus.
And that higher API should help margins.
Expected to, yes. The report also notes some sales might have shifted from Q3 into Q4 or Q1 due to customer buying patterns.
Okay, Piramal Pharma, continued strength.
Solid performance. 11% QOQ growth in Q4 exports for Piramal Pharma. And their overall FY25 exports were up significantly year on year, driven by products like rimegepant sulfate, Vigdron, and bempedoic acid.
Good momentum there. Any quick hits on the others mentioned? Bluejet, Suvin, Polymed?
Sure. Bluejet also had strong growth, 12% QOQ in Q4. Suvin, if you exclude Cohance, was less impressive at 7% QOQ growth.
But Cohance itself.
Cohance did well, 17% QOQ growth.
And Polymed.
Polymed was weak. A 7% QOQ decline in export shipments. IFL flagged that as a significant downside risk to their estimates.
Okay, quite a mixed bag on the export front then. Finally, the IFL report included their valuation views?
Yes, their pharma valuation matrix. Their current stance actually favors domestic pharma over export pharma.
Interesting. Who are their top picks?
In domestic, JB Pharma, Torrent Pharma, and Mankind.
Okay. And in export?
They prefer Sun Pharma, Lupin, and Aurobindo, but they express caution on most export-focused stocks.
Any specific cautions?
Particularly Dr. Reddy's and also ZYDUS and CIPLA. The concern there is the significant contribution from Revlimid, which is facing increasing generic headwinds.
Right, the Revlimid factor. The matrix itself gives detailed numbers.
Yeah, target prices, EPS estimates, key GRs, PE multiples, EV/EBITDA multiples, all the usual metrics for a range of companies.
And they also compared valuations for CRDMO players.
They did. A separate table looking at Divi's, SciLife, Suvin plus Cohance, Syngene, Newland, Piramal, Loris, Bluejet, comparing their key metrics and valuation multiples within that specific contract research and manufacturing space.
Okay, so pulling these two reports together, Centrum on domestic, IFL on exports, we have a pretty detailed snapshot. What are the sort of key takeaways for our listener thinking like that fundamental analyst?
Well, on the domestic side, the IPM picture is one of growth driven largely by price and new launches, while volume growth is under pressure, likely from generics and John Ashadi. Chronic therapies, especially cardiac and gastro, are the clear growth engines. Performance varies a lot by company, with CIPLA having a standout March.
And exports.
Exports in Q4 were really a mixed bag. Success was very dependent on specific product portfolios and CDMO contracts. Divi's faces that big sacubitril patent cliff. Gland was slow. Loris surged on CDMO. JB Pharma's lozenges looked good. IFL's valuation view currently leans towards domestic stability.
What about potential risks or future trends that analysts should be watching closely?
Definitely that muted IPM volume growth. Is it a blip or a long-term trend? The sacubitril impact on Divi's is unavoidable. The sheer variation in export performance highlights the need to understand individual company pipelines and partnerships, and that valuation preference shift towards domestic. That could signal broader investor sentiment.
So this deep dive into the data gives a solid, detailed foundation for anyone doing their own fundamental work in this sector.
Absolutely. It maps out the current dynamics, the key players' performance, the emerging trends, and the potential headwinds. It should help focus further due diligence.
Okay, great. Let's wrap up with a final thought for our listeners to mull over. Considering these, contrasting dynamics, the domestic market versus the export landscape, the pressure on volumes versus price hikes, the evolving product cycles like sacubitril, what are the really pivotal strategic shifts pharma companies might need to make to ensure they can keep growing and creating value consistently in the coming years?
That's the key question, isn't it? Something to really ponder.
Indeed. That concludes this deep dive. Thanks for tuning in.